Welcome to this tutorial on moving average trading strategy with using two moving averages. The two moving averages that we'll be using today are the 50-period simple moving average. So that's that one right there. And then the 15 EMA, 1-5 exponential moving average, which is my black line. So I use the 50-period simple moving average as a intermediate trend indicator. And how do I use the shorter term moving average? How do I use this 15 EMA in Forex day trading? By the way, this will work with stocks, Forex futures, commodities, E-minis, swing trading, day trading, because it's really just a relative strength type of dynamic in the energy of money flow. And therefore, yeah, it'll work on any time frame because it calculates relative to whatever bars you have, whatever market data you have on your chart. So here's the basic thing that we're looking for, the meta pattern, if you will. So in a downtrend like this, we're looking for strength down, weakness up, strength down, weakness up, strength down as we have these oscillations. So if we want to be short the market, be bearish, then I want a lot of strength to the downside. What do I mean by strength? I mean, literally what I mean by strength is, well, when I was trained at the Chicago Mercantile Exchange, got a floor trader there who agreed to train me, dumped 5 figures in his living room, and I was like, yeah, okay. But anyway, he was recommended to me by my broker, who had actually their trading floor was at the CME building, in the CME building. And so this was their top trader who then became their trainer. And I got an apartment out there. And this is one of the things that he shared with me, just the simplest things. You know, sometimes the simplest things are the best. And that's what I have found in trading as well, a lot of areas of life. So we want to go with the dominant energy. And what's happening here, very simply, is we would be looking out on the exchange floor and you can kind of see who's in the pits. I mean, they'd wear their colored jackets and their patches and all that kind of stuff. So anyway, you want strength down, meaning lots of energy in the sense of orders coming in fast. Big orders. We want to see, the big players, the big money coming in and selling. And then when the market retraces back up, we don't want to see a lot of strong buying. So either it's just a little profit taking down at the bottom and maybe a little retail, meaning amateur buying here, but not professional buying. And then the pros come back in and they're on the short side. And then the amateurs are going on the long side. The pros are on the short side. And that's basically it. Velocity and mass. That's the mathematical equation for momentum. So that makes sense. But that's how it equates to the markets. Speed of the orders coming in, that's your velocity. Mass equates to the volume, the size of the orders. And by the way, the little breakdown on the size of the orders is not just the size of the orders, well, not just the volume at the bottom histogram, I don't have it on this chart, but it even more importantly is the size of each order, which you can see in the time and sales, and I've done a video on that already. Anyway, the bottom line is I just wanted to show you that this is the meta pattern right here that we're looking for. Strength down, weakness up, strength down, weakness up. So, okie doke. Now, what we're going to be doing here with the 15 EMA is putting a line in the sand for weakness up. What I mean by that is, here we've got a strong move down. Okay, breaks through support. By the way, notice we've got 2 support levels here. These are just from previous major swing lows. What causes the market to go through support like it does here? Just slices right through, doesn't even acknowledge its existence. Well, it's going to be strong market move, velocity of orders and volume. So when you get that kind of strength, that's what pushes it down through and south of support. If you didn't have strong order flow to the downside, it would probably bounce back up. Okay, so when it comes up, now look how it doesn't come up very far. Actually, I wanted to use my arrow there. That's all right. You can use both. Now, you know what? Let's use the arrow so you can see the price bars better. So, right, we want strength down. Now, I'm putting my 15 EMA here as a relative strength indicator. You could think of it as a type of dynamic resistance if you want to, and that would be accurate. But even more specifically, it's a type of dynamic resistance to measure the relative strength of the retrace, the move up. I don't want it to get above the 15 EMA, because if it does, then what does that signal? That signals that, okay, now at this low, we would be getting some strong buying. And if we're short and we want to hold on to this position, for the whole trend, then we don't want strong buying against our short position. We don't want Goldman Sachs, Merrill Lynch, Citibank coming in and buying while we're going short. So I think that's pretty obvious. We want to be trading with the smart money. Go with the flow, as they say. And, go with the flow is a common phrase that they talk about in life and managing your life. It's a good one, but it applies equally well to trading. Go with the flow. Swim downstream. Why swim upstream? This is what I see amateur traders doing over and over and over and over. I'm going to take this off, make some new ones here. I see amateur traders, and when I say that, by the way, I got one finger pointing out and three back to me because I used to do this stuff all the time. And, well, that's how you learn, right? By mistakes. So I learned by losing a lot of money doing this. I would always buy this low, thinking, the market's going to turn around, or buy that low. Thinking the market's going to turn around, buy that low, buy that low. And this is what one of my former mentors, his name was Ray, he called this kamikaze trading. And it was kamikaze trading. It's suicide. And it's dumb because you're trading against, again, the dominant money flow of the market. Why would you do that? Why did I do that? I don't know. But in working with students, I found that there seems to be something in our nature that we're always contrary, that we always think we're finding the end of a trend for some reason. And trading trend reversals is a low win-loss ratio trade. It's a very high risk-reward ratio trade when they work out, but win-loss ratio is low. And so anyway, we could talk about that. Actually, maybe that would be a good topic for another video, trend reversal trades. But the bottom line is you want to trade early in the direction of the trend. And then when we're trading bar by bar, each time this goes down and retraces, we say, okay, how far does it retrace? How much buying is coming against our selling position? As long as it holds the 15 EMA, I'm comfortable. In other words, this comes into the slogan of, we talked about the trend is your friend until the end, right? So we trade early in a new trend. Another famous slogan is cut your losses small, let your winners run. So we want to let our winners run. And one of the ways we do that is to say, okay, as long as this thing stays below the 15 EMA, I'm golden. The dominant energy is still down. So another big impulse move down, a relatively weak retrace up. Another big impulse move down, relatively weak retrace. I can't speak anymore. A relative weak retrace up. That's actually kind of a tongue twister. Relative weak. Okay, yeah. The R's and the W's. Okay, then it comes back down, makes a lower low. Now look, it gets above. Oops, it's going off the screen there, I can see. So a couple of things on this. First of all, when we're in wave 5 is the average trend. The way that I count them, I'm not using Elliott waves. I'm using, what I call Berry waves, for lack of a better term. But see, now we're extended in the trend. We're no longer early in a new trend, and the trend is our friend until the end. So I actually would not be interested in shorting that anymore just because we're extended in the trend, just purely for that reason alone. And then if we go forward, let's see what happens here. Yeah, so just goes sideways, right? It's a mess. And by the way, this is one of the reasons that trend reversal trades are low win-loss ratio trades, is because rarely does a downtrend turn into an uptrend right away, or vice versa. Usually the norm is, sure, we have an end to a trend here, and then the market just goes sideways. Doesn't trend up, doesn't trend down, just kind of goes sideways. That's the norm. But the point for today's lesson is that once it gets above the 15 EMA, okay, then that trend is over. It does end. We've got strong buying. Actually, we go all the way from that low to that high. So now we've got strong buying. We break above that high. And why would I want to be short when we've got energy to the upside? I wouldn't. All right, so that's how you use the 15 EMA. If you want to use a couple of different moving averages, that's fine. These are the two that I use. It's the principle that really matters more than anything else. A lot of people use the 20-period moving average. Some people use a 9. If you have a favorite, that's fine. But using these, two moving averages together like this, and using one as a relative strength indication for retraces is really the point. Oh, one other point here too that's really important is that timing these, knowing exactly where these are going to come in is really important. So I do have a timing indicator I'd be happy to share with you. Depending on when you listen to this video, since these YouTube videos can stay up for years. But I do have a timing indicator that catches these cycle highs and lows with just amazing accuracy, and I'll be happy to share that with you. I do sell it, but if you're, you are a YouTube viewer, obviously. So just mention that, send an email to me at barry@topdogtrading.com, request the cycle indicator for free, and we'll show you how to get that absolutely free, no charge, and with a tutorial as well. So yes, just send an email to Barry. There's no opt-in page for this or anything. It's just barry@topdogtrading.com, and I do a tutorial, and then yes, you do actually sign up for the webinar, and we set the indicator up on your charts, show you how to do it. Works on any charting platform I've ever seen, by the way, so no worries there. Works with any market, any time frame, and yeah, it's actually one of the best things I've ever seen, but it takes about an hour to get it set up and show you how to trade it, what the triggers are. So what that does, see, basically we're combining time and price. W.D. Gann was famous for this. So the 15 EMA, this is a dynamic resistance level. So we want to combine that dynamic resistance level with a particular time. And that's then going to be our perfect spot to get in or to add more to our position, or in some cases, get out. So yeah, send me an email. We'll get that over to you. All right. And hey, if you liked the video, if you found it helpful, please share good things with good people. And there's a nice little share button there below that's very friendly, and it's just dying for you to touch it. So if you just tap on that, I sure would appreciate it. Also, your comments are much appreciated. They keep me motivated to keep providing these free tutorials for you. I do them every week, and I've got way over 100 videos here, and part of that's because you guys are so nice and keep encouraging me to do more. So as long as you do that, happy to do more. As long as I'm helping people, then then I'm motivated to keep going. So I love your comments. Also, thumbs up will always help. That's always encouraging to see. And oh yeah, I've got a complete trading strategy, a little mini trading course actually, on how pros trade differently than amateurs. And in that course, I will give you my rubber band trade. It's one of my favorite trade strategies, and it comes with everything: where to get in, where to get out, to the penny, to the pip, to the tick. So it takes longer than a little 10-minute YouTube video here, so we offer that separately. But again, absolutely free, and it's a great trade. I still take it to this day. So just click the upper right-hand corner of the video. Should be a little card up there, a little image, and when you click on that, then it'll take you to the page where you can register for that free course. And also there's a link in the description below. Love to send that to you. As soon as I receive your request, I will personally email that first video to you, and you can get started with that. Please paper trade it first. But yeah, this is meant to give you an actual trade strategy that you can make money with, not just theories or ideas.